Hey guys, this is Adam from Dodjit.com and this is your video briefing for the 5th of November 2009. Now, we mentioned in our last video on Monday that you shouldn't really expect too much from the market over Monday, Tuesday, probably Wednesday as well, apart from volatility. And the reason we just stated that is because most of the economic data was due to come out towards the end of the week. We've still got major data also to come out tomorrow. So let's see what we're looking at and how we're going to trade this market. Well, basically yesterday the Fed came out and they released their interest rate statement, and they mentioned that the economy is starting to head back onto a normal, healthy path. But the problem is that, number one, the financial sector isn't showing the same strength as it had shown in previous months. And in addition to that, recent GDP, and we received strong numbers from the GDP and also other economic data that's been coming out, it's not really based on consumer consumption, and that's the major problem now in the market. Everyone's looking now towards unemployment, because if you've got less job losses in the market, that means more people are going out, they're making money, they're going out and spending, and they're stimulating this economy. And then we're receiving economic growth that is based on proper personal consumption. Alright, so what happened? Basically, the market started to trade higher yesterday and they lost all of their gains. Let's just flip over to a 5-minute chart, see what's going on. You can see here, this is yesterday's start. We bounced higher, we climbed higher throughout the first hour roughly of the session, then we just started to range. Now, when the Fed decision came out, look at this, check all of this volatility out. This really wiped traders out, and you really need to be careful around these decisions, because normally the markets just tend to flip in each direction, wiping people out, especially if you're a news trader. So then normally, I don't know, me myself, I normally don't have luck with trading the news because I just get caught out on the stops. I'm more of a swing trader. So basically what happened, the market dropped lower, bounced back higher, and then what happened was that basically there was no steam left in this rally that had happened earlier, and it just gave up all its gains towards the last half an hour of the session. Now, basically what happened was that investors were looking at the speech, at the Fed speech, and they were thinking to themselves that the economy is starting to head back onto a normal, healthy path, and it's going to take additional time. But the problem is that the Fed, they're still a little bit cautious, and they're not quite sure going forward what's going to happen and how the economy is really going to escape from the current gloomy unemployment situation. And then basically what just happened was that the market sold off towards the end of the session. Now, we started the market today, look at this, we bounced higher, bounced completely higher. Now we're trading at yesterday's highs. So let's just flip over to a daily chart at the moment. We can see, now we stated this also on the daily report today, that we had this minor trend line. We are now starting to break it, but take this into consideration. Number one, we've got major resistance around this level. Number two, we've got an important result coming out tomorrow. Now, this is going to be really an important result, and I think that the result coming out tomorrow, we're talking about the NFP, the unemployment result. The markets are expecting at the moment that unemployment is going to probably reach a 26-year high. And if that's going to happen, it's obviously not going to be that good for the market. We could receive a minor or a type of head and shoulders pattern around here. It's all really going to come down to tomorrow's result, because obviously if unemployment is going to come out lower than expected, if we're going to start to see signs of a little bit of stability in the unemployment sector, in unemployment, so then yes, the recent GDP result, or at least the next ones, the following months, could be sustained by proper economic growth that was also caused due to the government's help. Now, I just want to flip over to a few Forex charts. The ECB and the BOE, they both came out with their rate decision today. Both of them held at their current rates. There's no news really there. What I'm looking at the moment is, I know a lot of traders were expecting a lot of volatility today, and they were expecting the rate decisions to come out and really rock the market. I don't think so. I think most traders are now starting to prepare for tomorrow's NFP result. as we have seen in the past, the NFP result can have a major impact, especially on the Forex market. It can often sling the different currency pairs in either direction, and sometimes they can even jump by roughly around 100 to 150 pips, really depending on the deviation of the result from the market's expectations. We're going to have to play it by ear. If you are in this market, if you do have bullish trades at the moment, just keep a close eye out. Make sure you've got a stop in the market. If you're thinking of entering this market, I would wait a little bit. Let's see how it all blows over. Friday, Monday, the markets will open up again, and we will be able to analyze to see a lot better where the markets are really going to be heading. Just moving over to the pound, and this is something that we also stated on the charts and also on our previous reports. Number one, we've got here major resistance around this area, roughly around here. Now, we did break our minor trend line. We were talking about this. We showed this also on the chart analysis page. We did break it, but we stated that we've got major resistance around this level. Again, let's see how it all plays out. We'll be a lot wiser after tomorrow. We'll basically be able to see where the markets are heading, because if the US economy is now starting to show signs of stability, certain sectors are really starting to improve. I think what we're going to really need now is a better than expected unemployment result, and hopefully if that comes out, it's going to really back this recent rally. Hope you enjoyed the video. My name is Adam from Dodjit.com.